Good morning, ladies and gentlemen. Thanks very much for attending this morning, and welcome to the 2010 Tow Show here at the Doubletree in Toronto. My name is Don Miller, and again, thank you for coming. If you don't mind, just take a second or two to turn off any cell phones. I don't want to interrupt the presentation, and if you don't mind, just hold the applause to the end as we've got a video camera here recording it for the PTO website. We're so excited to have Oren here. Oren Boyle is an agent at Investors Group, and Investors Group and the PTO have struck a agreement to be able to offer you some truly enhanced products. And today, or should I say this session, is the second part of a four-part series that Oren is putting on this week. And it's a workshop for business owners. So without further ado, Oren Boyle.
Thanks, Don.
Welcome, and best of luck.
Okay. Our technical problems, I think, have worked themselves out. I'm going to be giving a presentation this morning for business owners, and really just utilizing the corporation, your own corporations, to maximize your after-tax income. Okay, so here we go. The first question is: are you taking full advantage of your corporation? And it's what we're going to do in this is in this event is really just show you how to do it. There's different entities. There's yourself and your corporation. The corporation. Don, let's do this. Let's do this again. Let's re-record. Seriously, I think it's going to work a lot better if I just do it off the top of my. Thanks, everyone. Provincial Towing Association of Ontario Plan Presentation. Again, my name is Oren Boyle. I'm a financial consultant with Investors Group. And what I'd like to talk to you about today is ask you a question. How many of you are taking full advantage of your corporation? It's great to have a business that separates liability between yourself and your family, but are you taking advantage of that corporation for those planning, financial planning strategies that can truly make a difference in terms of yourself, your family, and your business? So there's two different entities for tax purposes. Obviously, there's yourself and your wife and your corporation. Okay? Every time, and there's a wall, a very specific wall between your corporation and you. Your corporation is really another individual. Every time your corporation moves money between you and between the corporation and you is a 46.41% tax, depending on your tax situation. But again, we're going to use that number for today's presentation. Let's say 50%. If that corporation takes that money, it's only taxed at 15.5%. Okay, big difference. So $1,000 expense to you needs $1,867 in terms of true expenses. A $1,000 expense to the company only needs $1,184. Huge difference. So, given the opportunity, which entity should pay the expense? We're going to talk about this further. So the 3 Ds of tax planning. Okay, the first one is deduct. Deduct any time you can, and we're going to go through that. The second one is defer payment. Okay, and we all know that through our RSPs and things like that. We pay our taxes later. The best one is don't pay, and we're going to be concentrating on that quite a bunch. Deduct and defer. So your corporation, 15.5%, you, 46%. Let's just say 50%. So lifestyle expenses. We've got investments, insurance, disability insurance, critical illness insurance, health and dental. These are all things that we may deduct or we may defer payment. So let's talk about having your corporation pay for those expenses with those preferred tax rates. Okay? From there, we're going to save some money, the difference between 15.5 and 46%. So, tax deduct critical illness insurance and health and dental insurance. We'll talk to you a little bit at another presentation about having the company deduct what's called Group CI. Also, in our next session, we're going to be talking about health and dental insurance, as well as the healthcare spending account. So again, these are all things. Corporate paid investments, life insurance and disability insurance. I'm sure a lot of you are doing that already. So, what do we do with that savings that the corporation is saving in the difference of taxes between 15 and 46? What we're doing is we're going to invest those, invest that 31%. So we can put it into investments, okay? Now there's a thing in Canada that if investments are passive within a corporation, they're going to charge at the highest tax rate. It's around 47.67% tax. So the way of doing that is having active investments. And at Investors Group, as a number of other companies as well, have something what's called corporate class investments. What it allows you to do is have those investments 99% tax sheltered, but still having access to the broad markets. The other thing that we can do is use life insurance. Some of you will say, life insurance for investment? Sure, it's 100% tax sheltered, and you can borrow from that life insurance policy in the future. So what it really does is it provides that fixed income component of your overall portfolio. Okay, so that eliminates you having to pay that 47% tax. Okay, and what we do now is we pay tax-preferred dividends upon your retirement. Fantastic. Again, starting to use that corporation to finally pay you dividends when you need it most. Okay, so this is what we really all want to know is don't pay taxes. So again, you've got your corporation. That corporation has a life insurance policy. There's you. And eventually, and I can guarantee it, you will become deceased. So what happens when you become deceased? Okay? You become your estate. So what happens then? Okay, that money goes from the life insurance policy to your corporation. Okay? We have what's called you can certainly talk to your accountants about the credit dividend account. Okay, so from that account, we move that money from the corporation, okay, to your estate. Okay, tax-free capital dividend paid to your estate. Okay, that's it. If there's any questions, again, we're going to hold off on those until the very end. But I want to thank you, everyone, for attending. There's a number of other concepts that we can use and show you to capitalize on your corporation. And feel free to come up after the presentation and talk to me directly about that. Thanks again. Have a wonderful day.